All right, today we're sitting down with our preferred lender, Andrea, to answer some of the most common questions we hear from our home buyers. Kendall and I work with a lot of buyers, and one thing that we've learned over the years is having the right lender is just as important as having the right real estate agent. There are countless moving parts in every real estate transaction. Each professional needs to be able to do their job exceptionally well for it to come together smoothly. One of the reasons we really love working with Andrea is we never have to worry about what is happening on the lending side, so we can focus on our job. She communicates proactively, stays ahead of deadlines, and truly takes care of our clients.
One thing we see all the time is buyers who have already been pre-approved but still don't fully understand what that means. They may know the maximum amount they're qualified for, but they don't know what monthly payment they're truly comfortable with, how taxes and insurance affect that payment, what their cash to close will look like, or what to expect throughout the process. So Andrea takes the time to educate her clients so they can make confident, informed decisions. She believes the goal isn't simply getting someone pre-approved, it's helping them understand what homeownership will realistically look like for their unique financial situation. So today we're going to walk through the pre-approval process because getting pre-approved truly is the first step in buying a home. We know everyone wants to jump straight into touring homes, but building a strong financial foundation first makes the entire process much smoother.
Okay, so let's get started. Our first question is going to be about credit scores. Andrea, one of our biggest questions from buyers is about credit. What credit score is typically needed to qualify for a mortgage? What's considered the minimum? And what should buyers ideally strive for to receive the most competitive loan options?
Yeah, and credit scores are such a nuanced piece when it comes to obtaining a home loan. So, I mean, minimum you can, right, be in the low 500s, mid 500s, but that is going to affect the down payment that you need to bring in, the loan programs that are available to clients, certainly down payment assistance, things like that. So while we can certainly do loans in the low 500s to mid 500s, to get the most bang for your buck, anywhere from like 600 and up, that kind of opens the doors to some more down payment assistance programs. Rate improvements happen at different tiers. So if you're at 580, for instance, like an FHA loan versus 600 or 620, and conventional as well, if you're at like 620 to 640, you're gonna see some benefit in the rate itself, the cost to the rate, and again, open the door to more programs. So while it is nuanced, I feel like within that there is like something for everyone, and it might not be exactly the loan that they want at that time, and that's okay. We can certainly improve on that if there's not something that they are looking for available at that time.
Good.
And then if someone isn't quite ready to purchase because of their credit, how can you help them? Do you work with clients to develop a plan to improve that before they buy?
Yeah, so we have within our system where we run credit and view their credit, we have options that allow us to essentially predict or put together a plan for them to increase their credit. For me, it's really important for my clients to be leaving my office or our meeting with either a program that we're like full steam ahead on or a plan to get them to where they want to be. So if it's something that is out of my scope, meaning there's not any improvements that are showing that they can do in a shorter amount of time, we also do work with credit repair specialists for the more nuanced cases, but most of the time I can set them up. They go pay off the debts to the level that is instructed. We do what's called a credit rescore. So in normal timelines, you would have to wait for that creditor to then re-report that payment being made. We do a rapid rescore, so it changes everything right then and there, and then that's how we get that improved credit score earlier as opposed to having to wait for everything to flow through.
Awesome. So budgeting for a home. Many buyers focus on the maximum amount that they're approved for instead of what they're truly comfortable spending each month. Can you walk us through a few common price points, what those monthly payments might look like, and how much buyers should expect to save for a down payment?
Yeah, so the down payment is one of the biggest things that is the driving force for the monthly payment. A lot of times, especially in today's kind of market, people are very hyper-focused on the interest rate itself. And of course, with big gaps in the interest rate or big jumps, it can certainly affect the monthly payment. But the biggest thing is it's based off of your down payment and how much you're actually financing, because that is what your monthly payment is going to be based off of. So when I'm talking to my clients initially, part of that conversation is, hey, what is your ideal payment, and then what does your stretch budget payment look like? Meaning, if you go out with your agent and you guys find like the home that checks all the boxes, meets all your needs, is in the perfect location, and so you're willing to maybe take on a little bit more on the payment, what does that look like? So that's an important part, because a lot of times people can go get pre-approved for X amount of house, but the payment is like well beyond where they would want that to sit. So say they're, jumping at a $400,000 house, but they want to put minimum down. Interest rates are where they are right now, so they might be looking at a payment that's a little bit higher, maybe 500 or so higher than what they're looking, what they're intending to have. So, so the driving force there is going to be how much you're actually financing. There are still rate buy down options, so if the payment becomes an issue, we can work together to get maybe some seller credit to do a temporary buy down, which does help alleviate that payment.
Awesome. And could you also explain what buyers should generally expect to pay for closing costs, and then what those typically include?
Yeah, absolutely. So closing costs are a couple different buckets. So we have what's called recurring closing costs. So that's going to be your property taxes, your property insurance, and then your daily interest. So the daily interest is baked in as a part of your total monthly payment, right? Your payment is principal, interest, but then it's also taxes and insurance if you're impounding those. So initially when we're closing the loan, we have to have insurance in place on the property. So we're funding through the closing costs that whole first year of insurance. And then we have what's called reserve funds. So the reserve funds are there for when the future payment of that insurance or property taxes becomes due. So we collect a little bit, it goes into your impound account. So that's one bucket of the closing costs. The other bucket is going to be your escrow and title fees. So that is going to be obviously escrow fees, title insurance to make sure that there's no clouded title that you're taking on as the new homeowner. A lot of buyers actually don't understand what that is initially, or why they have to buy it, and it's so that they're not taking on any old liens on the property that might then become their lien in the future. So it's important to have that. It is required as well. But that non-recurring closing cost bucket also includes things like your appraisal, your notary fees, your recording. So initially we are estimating those fees, and then they get dialed in throughout the process, but they should be within the range of that initial estimate.
So the loan process during escrow, once a buyer has an accepted offer, what should they typically expect from you and your team throughout the escrow? What documentation is typically required by your company, and how do you help ensure that everything stays on schedule for a successful closing?
Yeah, so I have a very tight-knit team, and we have a process like I've never had before. And I love it because I feel like it makes everything run smoothly for us, because we keep the stress levels down, but for our realtor partners and our clients. So day one, upon getting into contract, I am working with the client to look at their rate lock options. We are ordering the appraisal if there is an appraisal required. We're helping to request insurance quotes if needed, if we don't have that in place already. We kind of just get the ball rolling. We also request escrow fees, so we're going to be getting those fees that will be part of those closing costs. And we kind of just get everything going right ahead. So if you've already been pre-approved with me ahead of time, then we should have most, if not all, of the documentation that would be required for underwriting. But my loan partner will also go in, get everything reviewed. Her job is to spruce everything up so that everything I've given her, she just double checks, gets everything in, and then we try to get right into underwriting within the first 3 days. And most of my files, as we're turning them in, they're being disclosed and submitted to underwriting same day.
Perfect.
Yeah, and I think we've both noticed that it happens way quicker than we've
Yeah.
experienced and can close much sooner because of that.
Yeah, because sometimes we are we do have to work with other lenders, and it's not closing on time, they're making mistakes.
We're having to extend the contingencies.
Yeah, not communicating with our buyers, it's kind of a nightmare.
Mhm.
Yeah, we like to, my theory is I know things are happening behind the scenes with inspections, negotiations, and we're still taking in all that as it comes, but my goal is to always just have like loan docs waiting at escrow forever, and we
Yeah.
can always add in a seller credit, we can always update that settlement statement, but I like everyone to have that part taken care of, because that also helps with you guys,
Yeah.
like in negotiating too, right? Because you're like, hey, we're ready to go, and my buyer just needs, these needs met,
Mhm.
and nobody wants to cancel an escrow at that point and start all over when we're like at the finish line. So the
Yeah.
closer I can get you guys there, the faster, then it gives you guys a leg up when it comes to those negotiations.
Definitely.
Yeah.
Yeah, and I know we work with a lot of self-employed borrowers too, especially in the county we're in. There's a ton of
Yeah.
self-employed buyers and business owners who are writing a lot off on their taxes, aren't showing a lot of income maybe. So what kind of loan programs are out there for those situations?
Yeah, so, I mean, that's a great question, and gosh, we've expanded our options there so much throughout the last couple years, and I do think it's so important because, people don't want to necessarily pay all of their self-employed income into taxes, right? They want to shelter some of that. And if they've done that, that's okay. We have what's called a bank statement loan. So what that offers is we will go back either 12 months or 24 months. We collect the business bank statements. If it's ran through personal statements, that's fine as well. We can still use those. But what we're looking at is the deposits for the business. So we go through and analyze the deposits, make sure it is business related. And then there's an expense factor that is applied. If you have a CPA that they work with that can attest to there being like less expenses than what the blanket expenses that's applied, then we can do that as well. And I will say 9 times out of 10, it gives the buyer exponentially more income to use. Now on those programs, you are gonna be looking at wanting to bring in a full down payment. It's not necessarily made to be coupled with like a down payment assistance program, because the down payment assistance programs are just structured differently. They're ran through their own entities. So with a bank statement style loan, you're gonna bring in your down payment, but I will tell you, it opens the doors to a lot of different loan options. And if tax returns are, something that you, at least like if you don't have your down payment, you're like, hey, we've gotta just go like self-employed, at least if we are able to review that together, you have kind of an idea after that meeting of where you need things to look, right, in order for you to qualify. And then you can talk with your CPA and maybe make the necessary changes, not write off as much. That's, I don't give direct advice on that because I'm not a CPA, but at least again, it knowledge is power, right? So it gives you the knowledge to be able to go, okay, in the future, over this next year, we're gonna structure things a little differently, which then would open the door to that.
So it seems like there's like a couple pathways where they could do the bank statement loan, save more for a down payment, or choose to claim more income or
Exactly, yeah.
pay more taxes
Yeah.
and then qualify for a loan with a lower
Yeah.
down payment.
Yep.
Okay.
Absolutely,
Great.
yeah.
So I think it's the hardest right now for first-time home buyers.
Yeah, it definitely can be.
Yeah, so are there any special programs or down payment assisted programs that buyers should be aware of right now?
There are a ton of down payment assistance programs. So we have an internal program that we use. I love it. It's an FHA zero down. The reason I love it is the origination fee on it is a little bit lower than kind of the more mainstream down payment assistance programs. So what that means is the borrower gets to net more of the down payment that they're getting, or the down payment assistance, sorry. So it brings down that cash to close quite a bit more. At least like roughly 1% more. But overall, there are several down payment assistance programs that are designed to give help with closing costs, down payment. There are also perks that they will get as far as when it comes to rate, even if they're not using a down payment assistance program, sometimes if they meet the median income requirement, that can also help, with the rate and things like that. But yeah, there are several programs out there. There are programs also that are specific to like nurses, first responders, and teachers
Nice.
as well.
Oh, good, okay.
Yeah.
Awesome.
Nice. Okay. Yeah, I know a lot of people assume homeownership is out of reach for them because they haven't explored a lot of these options. So what advice would you give to someone who wants to purchase maybe within the next year or two? What steps can they start taking today to put themselves in the best position?
Yeah, call me. Honestly,
Yeah.
because I'm such a low pressure like loan officer. I'm not there to, once you get your application in, you're not signing on the dotted line for a loan. Right? This is like the fact finding phase, the financial planning phase, if you will. So our job is to review the application. You might be ready, might be more attainable than you think even earlier, and that's great. And then if a property comes up that you fall in love with in the meantime, at least you'll be ready to go. But I have several clients who I work with for, multiple years, 2 to 3 years, and it's never, it's always so like awesome and sweet when they do reach that finish line, because we work with them, we invest our hearts into it, right? And so there's like nothing better than finally getting somebody to get their keys and achieve that goal. But it really starts with getting the information and not just assuming, because a lot of people will just assume like, oh, I'm not ready to buy because of XYZ, or they have like these rules in their head that are just kind of outdated.
The 20% rule.
Yeah. And so I'm like, hey, like, I'm not here to pressure you. Let's, what I do is have them fill out an application. Again, I review everything, get all of the cards in front of us, see what programs they would qualify for, what that looks like. And then we meet in person or meet on a Zoom call and go over all of that. And sometimes maybe the payment with the down payment they have is a little higher than they want. So we make a goal to, save up a little more money and increase that down payment, or sometimes there's a gift that they don't even think of that they can get from family members that would then help. So there's so many things in the you don't know until you get the conversation going. And I always say, like, knowledge is power, right? So getting that information and getting a plan in place, that's going to be the best next step.
Yeah, I know with me, what you had me do was, because I was first-time home buyer and self-employed, we prepped for a whole year ahead of time because I was writing so much off on my taxes.
Yeah.
And so then following year, you're like, you have to claim so much on your taxes in order to qualify for this bracket. So then the next year I paid quite a bit on my taxes, so in order to qualify for my home.
It happens,
so,
yeah.
So getting, planning ahead of time, even a year ahead of time, and then just casually looking online or whatever you want to do.
Yeah.
Is.
And I will tell you, like, so many times people will be like, well, I'm not ready to buy, I want to wait this amount of time. They have like a time frame in their head, and then we'll go through the process, we get them pre-approved, and I feel like that kind of calms that nerve a little. And then like a month later, they're like, we have a house we want. And I'm like, awesome. Like, at least being ready, right? Because especially then on your guys' side, you're like, hey, we want to get this offer in and we want to be competitive. And so that means being prepared. Like, the more prepared you are, the more competitive you can be. Things run so much smoother. If we're trying to whip together pre-approval because you decided you didn't want to apply, but then the house popped up and we don't have all this in place, then everyone's scrambling, and it does create a little bit more chaos than if we had everything and we get it all set up and get you ready to go.
Yeah.
Again, once you're pre-approved, you're not signing for a loan. You don't sign, the loan doesn't go into effect until you actually close on the home. And the pre-approval is like, we just update the documentation as we go, and the credit reports are good for up to 4 months. And then at that point, we just do a refresh pull. So take as long as you want, but be prepared earlier, because then you're ready to go if something does pop up.
Yeah, you should not be looking at houses unless you're pre-approved, because you do not know what you're pre-approved for. You don't know what monthly payment you're comfortable with, and so you're just wasting your time, the seller's time, the agent's time. You really have to get this done first and foremost before you are even out looking at houses.
Yeah, because it just creates a lot of unnecessary stress. I mean, we've all seen it, and we'll pull it through the finish line if needed, and sometimes it's easier than others, but I think all of our goal is to be like, everyone's happy at the end, right? And so we know that in order to do that, we've got to have certain things in place, ready to go. Then I can confidently be like, hey, we can close, early, we can do this. It's like, it just creates a better just thing for everybody involved.
So how can people get a hold of you? I can just post at the end of this video, I can just put,
Yeah, email,
phone
call
number.
my cell. Yeah, I make
Yeah.
myself available for my clients because I just feel like there's so much misinformation floating around that I would rather have them just reach out to me directly. I always joke with my clients like, hey, I don't care if you text me at 3:00 in the morning, like my phone will be on do not disturb, so like I won't be getting back to you at 3:00 in the morning, but 6:00 in the morning or so, like I will get back to you because questions pop up and it's you know, as much as we try and mitigate the stress, there's just so much going on, so much information circulating, like especially if they're in escrow, right? So I'm like, just reach out, like I don't care, I'm available. Yeah.
well, thank you so
Yeah.
much for sharing all this with us today. If there's any other questions that you guys have that were not answered in this interview, then just reach out to Andrea directly.
Yeah. Thank you.